All right, we are live. Welcome back to another training video, family. This video is basically for my beginner traders who are brand new in trading, who do not know what a pip is and how to calculate pips, lot sizes. This video is for you. So, for my advanced students, obviously, if you know all this, please move forward to the next video, and I will see you guys there. Okay, so basically, what is a pip, right? So a pip is very simple. Um, it's basically the percentage in point of where a currency is, which is the fourth decimal point, right? Past the decimal. And this is for every single Forex pair except for the Japanese yen, right? So that's why I have an example down here, USD JPY, right? The pip is located on the second one, past the decimal, right? So very easy to remember. Uh, Regular currency pairs, the pip is the fourth one past the decimal, and Japanese yen pairs, the pip is the second one past the decimal. Okay, so calculating your pip movement now, and this is basically just how much money you want to make, how much money you made. Uh, it's very simple. Okay, so I have an example here. Let's say you're in a trade on Euro USD, okay? And you entered at 1.0851 and you exited at 1.0852 and you bought Euro USD, right? So in that case, the price has moved one pip because it went from 1.0851 to 1.0852, okay? And which means you won a pip and you won that trade, right? And it's very easy to figure this out. Um, one thing, side note, please take notes because I mean obviously you can go back to these videos, but note takers are money makers, right? And note takers will get very far in trading, um, especially in this course. Okay, so back to this. To figure out how many pips price moved, all you really got to do, right, is subtract 1.05. So I'm sorry, 1.0851 and 1.0852, and it literally gives you 0.0001. So that's why I'm saying the pip is the fourth to the decimal, because if you subtracted this, this is what you would get on a calculator, right? Which is just literally one pip. Okay. So that's basically all you need to know for this. Um, Obviously, this is a simple example. We can do other ones, like say, right, 1.0852, and you bought, but price went down to 1.0850, right? So you would actually be negative 2 pips, and you would have lost that trade. And simply you just subtract the two, and that's how you would figure that out. Okay. On this next slide here, I pretty much have what lot sizes you should use and examples of pairs with those lot sizes and how much money you would make, because I cannot stress this enough, right? You do not want to over leverage. Um, and you guys shouldn't even be worried about that right now, because if you're a beginner trader and you're just starting out in this course and trading, you should definitely be on your demo for at least the first 2 weeks, right? And I know that we're going to be calling out trades, we're going to be giving out trade setups, but please, for your first 2 weeks, be on a demo, right? Because you just need to get used to uh, basically calling out, like, not calling out trades. You need to be used to getting into trades, right? Placing your stop loss, placing your take profit. And if a trade goes wrong, you need to be used to losing money and having no emotions attached to losing that money, right? Uh, which basically any trades that you call out or that you get into yourself for you're starting out in your journey, they they might lose. You never know, right? We're not all master traders yet, so we might have some losing trades, but that's all right because over here you have your standard, mini, micro, nano lots, right? So if you don't over leverage and you don't go crazy popping standards right away, right? You're not going to be down $1,000 if it moves 100,000 units, right? You're going to come in, you're going to put a 0.01, and if it moves 1,000 units in the wrong direction, you'll only be down, what's that? 1,000, you'll be down like $100, which if you're coming in on $1,000 account, that's not so bad, right? So basically, right. So let me just explain this real quick. Um, a standard lot, right? And you have a standard. It's literally moving $1,000 per pip, literally per pip. So I was going off the example before, right? If you put a standard and lose one's pip, you'd probably be down $1,000. That's very bad. All right. So you always want to come in using nano or micro, especially if you're a new trader. Please do not go and use minis yet. Uh, Give it a month at least before you start going crazy with higher lots. And trust me, just build up the confidence, and you will be successful in this trading industry if you just take it slow and work your way up. Right, quick money in this game is it can happen if you get lucky, but a lot of the times you can lose a lot of money. Okay, so we just want to build confidence and we want to become experienced traders because experienced traders are the ones that win, right? So you guys can screenshot this or take notes about this, right? And please, please, please study. If you need to, do some practice problems. Go into the on the charts after we take trades, right? And just calculate how many pips you might have made or how many pips you might have lost, right? So I can't stress that enough. Study, 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 right? And take notes. Note takers are the money makers. All right, let's get it. All right, guys. So that's pretty much it for today's video. Thank you guys for hopping on, and I appreciate every single one of you. And I will see you guys on the next video. Okay, peace out.